Well, to the markets now, and a broad-based rally today, though the Chinese market was again a concern. The ASX jumped from the start of the day amid a slew of corporate results, with banks, miners and energy stocks leading the way. Across Asia, different story, with markets spooked by the idea of the Chinese authorities withdrawing support for the Shanghai index. And the Australian dollar's down against all the major currencies. James Rosenberg from Macquarie Private Wealth joins me now. And James, a change of mood today, but all with one eye on what's going on with these Chinese markets.
Indeed, Ticky, a massive change of mood. We put back all of what we lost yesterday and then some, with the market up in excess of 70 points. It was sold down late yesterday, as you know, on that very, very weak market in Shanghai. And although it did touch 5% down today, it's recovered a little bit from that. And so local investors have very much taken it in their stride. But keeping a weather eye on what is happening, of course. The fact that the government have decided to devalue the yuan really does suggest that there are concerns about growth in China, and of course they're such a key trading partner. Domestically, the banks, Woolworths, Wesfarmers, Telstra really led the market. The banks, in terms of overall points, added over half of the gain. And if you look at the negative contributors, SEEK, CSL and Newcrest, I think combined they accounted for less than 3 points of decline.
Right.
Westpac, the biggest positive contributor, was almost 13 itself.
Well, let's go to some specifics. We just heard from Michael Clark at Treasury Wines. Now, that was up 14%. I think the market cheered the return to profit.
Indeed, a massive cheer. Maybe not as many clinking of glasses as Mr Clark would like, but it was a big turnaround in profit. Very strong in Australia, very strong in the US, and particularly strong in Asia. They've had a big focus there, as Mr Clark was saying, about optimising their routes, and that has resulted in the cost of business decreasing by about 30 basis points. They've also guided the market that capital expenditure will be about 10 million or 10% less than had been expected, and that saw a really big turnaround in the stock. Some of it might have been a bit of short covering, but some big plans for the future, including interestingly named Gentleman's Collection in the US, which I'm no marketing expert, but I would suggest that is aiming at a small portion of half the population.
All right, Woodside's profits have tumbled along with the oil price. Did it deserve such a clobbering?
Well, it did tumble, but it was widely expected. Ticky, the oil price, as you mentioned, has been lower. Anyone who wasn't expecting a sharply lower profit has not been watching your programs, probably even been asleep. The company has done a good job in reducing costs and trying to make it as efficient as possible, but not surprising to see a big drop in profit and in dividend. The big focus, of course, will be on the outlook for projects such as Browse, which will have a decision on later this financial year between Woodside and its joint venture partners, but clearly some pressure there.
James Rosenberg, thank you very much for all that.
Pleasure.